Hello everybody, this is Raul Torres. I'm your host of Let's Talk, and we're getting ready to start this week's edition of the Let's Talk show. And today we're going to talk about something everybody probably has a great interest in. So let's get into the intro and then we'll get started. This is Bachman Turner Overdrive from their number one hit back in the 70s, Taking Care of Business. One of my favorite songs. All right, folks, we'll get started in 10 seconds. So, ladies and gentlemen, welcome to the Let's Talk podcast. I'm your host, Raul Torres. It's so nice to have you with us. If you're tuning in for the first time, this is a show about business, mostly directed to small business owners, about things that impact their lives and their businesses. So we want to empower you and help you grow your business, keep more of your money, and make life so much better for your family, yourself, and of course for our community. We'll get started in 3 seconds. All right, here it goes. 2, 1, let's go. All right, ladies and gentlemen, thank you so much for tuning in this week's Let's Talk podcast. I'm your host, Raul Torres. Been doing this for over 32 years, and I just love it. Just love what we do. Changing lives through using the tax code, accounting principles, and good old-fashioned experience and sharing that with others, paying it forward, all right? So that's why we're here. God has been very good to us. We're a small group of CPAs and accountants and tax professionals. We had a number about 15 in our small little community here, located in Corpus Christi, Texas. Our address is 3046 Holly Road. And again, thank you for joining our show. Today, we're going to talk about how to prepare your business for an IRS audit. Ladies and gentlemen, nobody wants to deal with the IRS. That's just the way I can summarize that. And we've been doing it for 32 years and more, and we've been helping small business owners and individuals deal with the IRS in the most effective way possible for them. And if you ever get caught having to deal with the IRS, you need a proven professional on your side to help you navigate through that quagmire of regulations and issues and other technical stuff that they throw at you that we're typically not prepared for. So we're that guy. If you're looking for that person, give us a call. We help solve IRS problems all the time. In fact, just a couple of years ago, we had a client, 3 years ago, we had a client that owed the IRS $1.75 million. And we settled with the IRS, for less than $16,000. And it would have been even less than that, but we got caught unexpectedly with a title to a vehicle we didn't know about. And so the IRS mandated that was the only way they're going to settle. So we took the deal, and it was a great deal for us. So we know how to deal with the IRS in case you ever have an IRS issue. So folks, today we're going to talk about why businesses get audited. I know there's a lot of people out there that says, hey, listen, if you do this, you're going to get an audit. If you do that, you're going to get an audit. But the fact of the matter is there is a real solid science behind people who get audited. And we're going to share some of that with you. We're also going to talk about the biggest mistakes owners make that trigger an audit. Yeah. And we're going to talk about the documents the IRS commonly asks for so you can be prepared. And we're going to talk about how to prepare for an audit before it even happens. So guess what? If the audit letter comes, who gives a 2 cents? You're ready, you rock and roll to defend yourself. And we're also going to talk about what you should do and what you should not do when you receive that nasty IRS audit letter. Yeah, nobody wants one, but if it comes, you're ready. We're going to get you ready. And lastly, how to dramatically reduce your stress when the IRS comes knocking on your door. The tax man is around the corner. And even though we're not going to talk about this, there's another tax man that's knocking on your door if you're a small business owner. That's called a comptroller of public accounts. But we're not going to talk about them right now. We'll deal with them later. Today, let's get started. I'm your host, Raul Torres, CPA. I've been doing this for 32 years, and I and my team want to help you get ready for an IRS audit. Okay, what is an audit? Ladies and gentlemen, in simple terms, they just want to take a look at your tax return. That's it. That's all. Don't stress out about it. It's just, hey, we want some other information to go along with your tax return. All right, so the IRS wants to verify the data or the information that was put on the tax return. That's all they want to do. And contrary to what many people believe, receiving an audit does not mean you did anything wrong. Now, of course, if you know you did something wrong and you purposely were aware of it, well, I'll take that back. Even if you're not aware of it, about 25 to 40% of our tax clients admit to us that they signed a tax return with information on it that their prior tax professional, they say they have no clue where that came from. Now, understand, when you sign that tax return, you're telling the IRS, this is data that I approve. That's what you're telling them. It's serious stuff when you sign a return. All right. So, what else can I say? All right. Let's talk about some questions they're going to ask you about. So, number one, it doesn't mean you did anything wrong. They're just knocking on their door, being nosy like the government is, investigating. That's it. And they've decided to pick on you. All right. And your small business. They're going to ask you things about your income. So, in other words, you got to know how you calculated your income. You can't just say, well, it's just a number I picked out of the blue sky. You got to have a system. They're going to ask you, what is the process? Number two, they're going to ask you about your expenses. They're going to ask you. They're going to ask you about your payroll if you do have payroll. And if you don't have payroll, but you have contract labor, 1099s as some people call them, they're going to ask you how you came about with that number, and how you calculated that. They're going to ask you about all your other deductions. Normally they pick on, if you're a Schedule C filer, the deductions they normally pick on are in the line item on the very bottom of that page in Schedule C that says other expenses. And they're on the second page of the Schedule C. Those are the ones that typically they pick and want detail on. So they're going to ask you about that. And here's another one that's an easy one for them. They're going to ask you about your meals and how they qualify for business deduction. There are rules to that. For example, if I'm sitting in my office and it's lunchtime and I decide I'm going to go get me a burger at Whataburger. I just say that. And I head on up to Whataburger and I order my double meat with cheese and I get my receipt and I say, well, I'm going to put this as a business deduction. I can do that. Unfortunately, the IRS says I'm not entitled to a tax deduction by doing that. And there's the difference. The difference between what they say is an eligible deduction and what most small business owners think is an eligible deduction. So having information about this kind of type of expenses is valuable to you as a small business owner. They're going to talk to you about travel. Sorry, I'm going to have to. So, I'm back. I had a phone call. Sorry about that. They're going to ask you about travel. And there's rules called the travel rules. There's domestic travel rules and there are international rules. And again, if you don't know that stuff, hey, listen. Hey, by the way, Dr. Greg, thank you for popping in on the show. Appreciate you very much, my brother. He's an awesome man. Awesome man. If you get to know Gregory Parker, I call him Commissioner, you won't find a better guy than him. So thanks for showing up, sir. Depreciation and the equipment, the vehicles, things that most small business owners deduct. If you have inventory, they're going to ask you about your inventory and how that's counted. And of course, we already talked about the 1099. Look, their goal is straightforward. Did you prove the data on your tax return? Can you prove that? That's all they want to know. And if you got good records, you're good to go. Don't sweat it. You're done. Knock yourself out, Mr. IRS agent man. I really don't care. The sooner you finish, the better for both of us. And the one thing about auditors that most people don't know is they got so much time to do their job. And if they can't find any money, they got to hang it up and move on to the next guy. That's just the way that they're programmed and trained to do. So if you got all your ducks in order, you can give them what they ask. Audit's going to be over like this. Nothing to worry about, my friends. It's that simple. But if you're scrambling for stuff and you can't provide them, then the can of worms or the Pandora box gets opened up and they start digging. And the more they dig, the more they probably are going to find that your records are sloppy. And who's at fault for that? Yeah. You're looking at the, when you look in the mirror, you're looking at the person who's responsible, my friends. All right. So that is all an audit is. Nothing more, just checking you out. All right. So, by the way, if you guys have any questions, pop in the question into that little comment section and we'll answer them for you. All right. Thank you so much. All right. Oh, by the way, if you want a summary of today's show, just leave us your email address in your comment section and myself or one of my staff will send that to you today. All right. Also, number 2, let's go on about why people get audited. Your business. All right. There are reasons. Number 1, you report large business losses. All right. You're a Schedule C filer and you're telling the IRS you lost $150,000. That is a lot of money for an average Joe. It is. So again, not that they're going to turn you down. They're just going to be curious to find out how a Schedule C filer can afford a $150,000 loss. Yeah, that's all they're going to ask. And if you can say, hey, listen, I got an SBA loan, I borrowed $300,000, hey, you're good to go. No sweat. But if you can't explain it, ladies and gentlemen, they have a right to ask. All right, so claiming large deductions compared to other businesses is often a question that they want to ask, how did you afford this? All right. Now, there's other things that bring about significant scrutiny under the IRS. Excessive deductions. Number 2, excessive deductions. For example, we find this often with clients. All of us have heard the word supplies, right? Supplies, supplies, supplies. For some of our clients, in their head, the word supply means inventory, things they buy that they resell. All right? That's what it means. For others, the supply means office, it means inventory, it means everything, right? Everything under the sun. And so if they put a large amount of supplies, I'll use an example. Let's say they show revenues of $90,000, but their supply expense is $28,000. Now, in the average world, for the average Joe, $28,000 represents a huge percentage of the $80,000 of revenue. Expect an audit, because that's not normal. So, that's what I mean by excessive deductions. Or, for example, if you're taking automobile expenses. So let's say you have a $100,000 of revenue, but your automobile mileage, and you take in the mileage, is 65,000, right? Miles. So you're going to get like a $42,000 deduction. You can expect an audit because most people don't drive 65,000 miles a year in a small business. That's just not normal. Now, I met one guy, he actually did. He drove like 90,000 miles one year. And I said, how did you do that? And he says, oh, every morning I jump in my car at 5 o'clock in the morning. I head over to Victoria. From Victoria, I head over to San Antonio. From San Antonio, I head down to Laredo. From Laredo, I drive down to McAllen. From McAllen, I drive back to Corpus. He said, I do that every day, 5 days a week. And I said, well, oh my goodness, this boy does drive a lot of miles every day. He could prove it. So, I said, don't worry about an audit. Even if they come knocking, you got your mileage book, you're good to go. All right? So those are the things that we're talking about, excessive deductions. If you have meals, like you take $20,000 meal deductions on $100,000 of revenue, that's going to trigger an interest in most cases. Not guarantee it, but in most cases. All right? All right. Let me ask you one other thing. When you take deductions that make no sense, and I'll give you an example. You have a home office at home, right? But you report rent and utilities. You have rent of $28,000 and utilities for $9,000. But you also tell them you work out of your home. Guess what? That doesn't jive. If I was the IRS man, I'm going to ask a question. Well, why would you do that? So that's what I mean. All right, number 3. The third reason why people get audited is strictly because of the nature of their business. For example, if I run a restaurant, or if I have run a flea market, or if I have a small boutique, or any small business, we call them cash businesses, right? Restaurants are huge. All right, construction companies, convenience stores, landscaping, lawn services like that, automobile shops, all right, electricians, anyone that can receive large amount of cash, they're automatically a target because the IRS isn't dumb. They know that a large percentage of American taxpayers do not report cash payments. They know that. And so they're going to come looking at your records. More than likely. All right? So, but if you've got everything lined up and you can prove that you made all your deposits, blah, 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 you're good to go. Who cares? Number 4. Payroll. They make a mistake on payroll, which means it doesn't jive to the tax return. And I can tell you, at least 50% of those do-it-yourselfers who are out there trying to save $5,000, $3,000, whatever the amount is, they do their own payroll. And the payroll is all screwed up. It's messy. It doesn't jive, doesn't reconcile. Well, I can see why the IRS wants to ask questions. It doesn't make sense. So, my friends, payroll. If you're going to do it yourself, by God, at least do it right and save yourself an audit. When you don't treat contractors like employees, like they should be employees, but you give them 1099s, well, that's another reason that you might get audited. Because all it takes is one weasel, one of those contractors that for whatever reason decides you did not treat them fairly, goes knocking on the door for the government, either state or feds, and say, hey, I didn't get paid correctly. Only takes one. And chances are you're toast. That's all it takes. So, payroll is another reason. So in summary, why do you get audited? Excessive deductions, large business losses, cash type businesses like restaurants, small business service providers, payroll not reconciling to your tax return. Next, large charitable contributions. All right? Now, that's not normal. If you're making $40,000 income from your small business and you're contributing $30,000 to a nonprofit of your choice, that's huge. You don't see that very often. The average American, only gives 3%. That's average. Doesn't mean that there aren't people out there who really pay their tithing or excuse me, become more generous. Excuse me. And then take a break. I'm going to get you some water. People say, why are you getting the water? It's because I can. So here's my refrigerator. All right. So as you can see, we're on live. This is a live show. We're not videotaping anything. All right. Another one, mathematical errors. You know, even though we graduate from high school, some of us still struggle with math. So those of you who do it yourself payroll, you do it your own accounting, you do your own tax return. If you make a mathematical error, I got words. news for you. The IRS is going to catch up with you. That's right. They're going to catch up with you because they're looking for these kind of things. The self-prepared guy. They don't trust us. And so they're going to come knocking on your door. Another one. IRS the data doesn't reconcile. For example, you receive a distribution from an IRA. Let's say it's $10,000, but you don't put it on your tax return. You forgot or whatever. You're giving them a reason to come knock on your door. So being thorough is very important. All right? So those are the primary reasons why they audit you. Your information doesn't match. You have large deductions above normal averages. You have mathematical errors. You give large cash contributions compared to your revenue. Your payroll doesn't sync or doesn't reconcile. You're a cash business. They know that most people lie. And lastly, large business losses 1 year after another year after another year. And the IRS told us at a workshop I went to some years ago that they specifically look for businesses that have losses greater than 3 years. All right. So, we'll move on. Here are the biggest mistakes that small business owners make. Number one, they don't have a system. They just throw everything into a box, maybe they don't even keep receipts. You'd be surprised how many spouses tell me that their husbands do not give them receipts of things they buy for the business. They just don't. They're asking for trouble, right? They don't have a bookkeeping system. Or they do their own QuickBooks, right? And I can guarantee you that most small business owners, in my 32 plus years of experience, do not report all of their expenses because they lose stuff. All right, number two. They mix their personal expenses with their business expenses. They think the money in the business account is their money. Well, theoretically it is, but guess what? You start mixing stuff together, you're actually asking for additional snoopy, investigated IRS agents to keep digging. And all they need is one little opportunity to dig more. So, if you want an IRS audit and you want it to be expanded, keep mixing your personal and your business together and you'll get exactly what you want. I had a client who did that. Yeah. And because he did that, the IRS not only disallowed all his expenses, they took a 1-year audit and they made it a 3-year audit. The poor boy ended up owing the IRS nearly $90,000. And there's nothing I could do to help him because he didn't have records. He mixed it. And it was hard to prove otherwise. So sad. He ended up divorced, by the way. Number 3. Most small business owners wait till tax season to gather their records. No bueno, guys. This is not good for you. Every small business owner, you owe it to yourself and your family to be organized. If you want to become wealthy or run a profitable business, that is essential. I've never met a successful business owner who's sloppy, who's disorganized, who has no system. I've never met one. It doesn't work. So if you truly want to help you and your family do better, get a system in place. Save those records, organize them, add them up monthly. Last, number 4, preparing your own return without understanding the tax laws. That's where you miss all these opportunities for deductions. But you know what? You want to save that $800, that $500. I understand that. That's a lot of money. I really do understand how important that is. But ladies and gentlemen, my dear friends, that is nothing compared to what you're going to pay the IRS in taxes for lack of good records. But it's your life, your decision. Number 5, when you get an IRS letter, please open it right away. Do not ignore it. The longer you wait, the more you're asking for an audit. Yeah. And the larger, if there is a bill owed, the bigger it gets. All right, number 6, guessing. Guessing. You just want to pull a number out of the air and say, I'll just put that in there. You can't provide a guess pulled out of the air. You can't. You can do an estimated guess based on some logical approach, on some historical average, on something methodological, right? Something that makes sense. You just can't make up a number. And please don't ask your tax preparer to make up a number for you. Because if they do, let me see, how about unethical? It is unethical for us to do such things. It's got to be your number. And I hope you have a system or a logic behind it besides, oh, just something I just dreamt up. Lastly, as we wrap up today, it's been great while talking to you guys. The document every small business owner should do. Number 1, a profit and loss. Every month, run a profit and loss. You got to know what your expenses are. You got to know what your income is. And you got to know the difference. And if you're in construction, for example, you should do that for every job, every week. Because it comes back and bites you if you don't manage those costs. As it is, the margins are small. Same thing for restaurants. They're small as it is until you get the break-even point. And then you can start, then it becomes a cash cow. But until you get there, sustaining it, being able to sustain it month after month, it can knock you out quick. Next, bank records. That's it. Bank statements. Keep them. Don't throw them away, please. And don't throw away your receipts. Cancel checks are important. For those of you that love doing business with credit unions, I have nothing against credit unions. But most of them do not provide images for any checks you write for business. Well, guess what the auditor is going to ask for in an audit? If you said a check image, you're correct. That's what they're going to ask for. But you got a bank statement from the credit union that has no images. Good luck with that. All right. Lastly, credit cards. If you use a credit card for business, keep the statements. They are important. All right. If you do payroll, keep your payroll records along with your timesheets or time cards. Keep them bundled per payroll cycle because they're going to come knocking on your door and they're going to ask you for those. Lastly, income and expense documentation. How do you calculate income? Is it an invoice? Is it a handwritten receipt? What do you do? What about your deposits? They're going to match it. Everything you do in-house, they're going to trace it back to the bank statement. And if they don't line up, excuse me, if they don't line up, guess what? They're going to audit you more. They're going to dig more. Don't blame the IRS. You're not following their process. And expenses, boy, just keep your receipts. It's not hard, guys. It's not hard. Just stick it into a folder. I organize all my expenses by month. And every month, I stick those receipts in that folder. I document what that receipt was for, like office expense, or supplies, or automobile expense. Or is it a qualifying meal? Who did I eat with and why? I had a meeting with them. All right. Lastly, if you drive a car or a truck or any kind of motor vehicle for business, keep, in most cases, if it's a passenger vehicle, keep a mileage log. You can't pass an audit without a mileage log. There is just no way. Keep one. All right. If you buy assets, you buy a lawnmower, you buy a generator, you buy a vehicle, keep the purchase receipt. They're going to ask you for it. And lastly, if you are an LLC or a corporation, you're supposed to have a corporate kit. And you're supposed to have at least one meeting per year. Do you know how many people don't have meetings at all? About 90% of them. They don't even have a corporate kit. And they wonder why they get in trouble. My friends, this is serious stuff. But if you do this stuff, who cares if the IRS comes knocking? You're good to go. All right. Lastly, as we wrap up, if you do get a notice from the IRS and they want to audit you, you got two choices. You can represent yourself, or you can hire a third party to represent you. Your choice. But whatever you do, don't panic. Panicking doesn't solve anything. Have a process ready to go, all right? And it's that easy. It's not that hard. Whatever you do, contact your tax professional, whoever prepared the return. Contact your CPA if you're working with one. If you're a smart business owner, you're typically working with somebody a lot smarter than yourself. If you are. Somebody who understands the laws and the regulations, right? And whatever you do, if you decide to talk with the agent yourself, whatever you do, answer the question exactly, nothing extra, as the agent is asking you. Don't give them extra stuff. Don't volunteer information. You are not helping yourself. And that's the end of the story. Folks, thank you so much for watching this week's episode of Let's Talk. It's been a pleasure. I hope this topic has brought up some thoughts for you to consider as you run your small business. And remember, just as I wrap up, remember that a well-organized business owner is proven to not only grow their business, increase their profits, but also create wealth. That can be you. All you need is a good process and a good professional to give you some guidance. So remember, do your work every week, every month, depending on your industry. Keep tabs on your number. And when the IRS comes knocking on your door, you're ready no matter what time or day or month of year they come knocking, because you've done it the right way. You've followed the process that you created. All right, my friends, thank you so much for watching this week's edition of Let's Talk. It's a pleasure to be your host. I'm Raul Torres, and if you have an interest or a need for a service-conscious business to serve you, give us a call. Raul Torres, CPA PC, right here in Corpus Christi. We're located at 3046 Holly Road, Corpus Christi, Texas, 78415. Our phone number is 361-854-0822. 361-854-0822. Again, 361-854-0822. Thank you so much for watching. God bless you. God bless America, and God bless President Trump and his administration for making America great again. Take care.